This is Trade with MK. Welcome, guys. I am MK, and in this class, I'll be teaching you guys how to use liquidity in your charts correctly. Now, if you stick with me to the end of this video, you will know how to spot liquidity zones and trade from liquidity zones correctly, and also use this method to increase your win rates as a day trader, a scalper, or even a swing trader. Now, without wasting much of your time, I'm going to dive straight into the video. Now, we are going to be going over external range liquidity and internal range liquidity. Now, external range liquidity is basically your swing highs and swing lows in the market. That's basically it. And while your internal range liquidity is fair value gaps. So I use fair value gaps as my internal range liquidity. Now, how does this work? Now, as you can see in the diagram, this is your swing high, which is also our external range liquidity. This is a swing low, which has been taken out, which is our external range liquidity. Now, in this case, our external range liquidity has been taken out, which is the swing low. What are we anticipating for price to do next? Now, the next thing we want price to do is for price to trade back into our IRL, which is our internal range liquidity. Now, in this case, we want price to do this trade back inside of this fair value gap. And then we'll now be looking for our entry confirmation here to go short to take out this new low here, which is also our ERL, our external range liquidity. So it's very simple, just as simple as that. You wait for price to break out of your external range liquidity, and then now I will not advise that you take a trade targeting your internal range liquidity. In a case where, let's say, in a case where our IRL does not hold, now using this diagram as an example, in a case where our IRL doesn't hold and it inverts this fair value gap, now we use this fair value gap as support to target our next ERL. Now we all know that we could take trade from our inverse fair value gap to take this higher, which is our external range liquidity. Now, in a case where this happens, now this is a change of structure. What are we now looking at for? We are waiting for price to come back into our IRL. Then we look for our entry again to continue to this new high, which is our new ERL. So it's as simple as that, guys. I'm going to be diving over to the charts now and show you guys how it is on the charts. Now this is the daily time frame, and I'm going to be using the replay tool here to show you guys how it is. Now we say our want to spot out our ERL. Now this low right here is a liquidity zone. This is our ERL. Now what are we looking for? Price to take out this ERL, and then we start looking for our trading opportunities. Let's play price and see what happens there. So as you can see here, we trade into a fair value gap. We trade into a fair value gap, which is our ERL. Now, if you look closely, you see that we recently break this low, which is ERL. Then we traded back inside of fair value gap, which is our IRL. Now, what are we anticipating? We're anticipating for price to take out this low, which is our ERL, and then give us another IRL to trade off from. So let's play price and see what happens. See, we take out that low. Now we've taken out this low. What are we looking at for price to trade back into this fair value gap here, which is our IRL, and trade away from it. Now we have a new low. We have a new low here. We want price to trade back into. Now we are waiting for price to trade into this fair value gap and then take out this low. So let's see what price does. So we trade back into our IRL, respect it, and then we've taken out this low. Now that's just what you need. Let's just do a few more examples. Let's do a few more examples. Few more examples. Now this is a new low. Let's play price forward. So price creates a new lower low here. Let's see play price. Okay. So you continue lower, lower, lower. So now we've created a new lower low. Created a new lower low. Now what are we looking for? We are looking for price to trade back inside of our IRL. Now if you see this, this is fair value gap here. Now we're looking for price to trade back into this fair value gap and then take out our external range liquidity. So now we've traded back inside of it, and this is where you find your entries. You scale down to a lower time frame, use your entry model to enter a sell trade from here and target this low, which is your ERL. Let's play price. Easy peasy. Now we've taken out ERL. So that's how you just um use liquidity, add it to your strategy, add it to your conference, and increase your win rate, guys. So this thing works 90% of the time. 90% of the time. So you basically just know the direction of the market, you know where the market is going to next. So you just trade towards that direction. In my next video, I'll be showing you guys how to find a valid fair value gap to trade off from, because you are not just trading off from any fair value gaps. In my next video, I'll be showing you guys how to spot a valid fair value gap. So guys, if you like this video so far, please give this video a thumbs up, subscribe to the channel, and support the channel, guys. Thank you and peace.